This video is not financial advice and does not constitute an individual investment recommendation. January, $15,000 in client payments.
February, $4,000. March, $9,000.
April, 0. Every standard financial advice piece tells you to save a fixed amount each month.
Great advice when you have a fixed paycheck. Completely useless when your income looks like an EKG.
This video is for freelancers, gig workers, self-employed people, and anyone whose income varies month to month.
Save $300 every month. Works perfectly when your paycheck is exactly $4,200 every 2 weeks.
When your income ranges from $4,000 to $20,000, a fixed $300 is either too painful in lean months or embarrassingly small in fat months. You need a system that adapts to your actual income automatically, every single month, without requiring willpower decisions.
The buffer account is a high-yield savings account at Marcus, Ally, or SoFi. It does one job: smooth your income.
Every client payment goes directly to the buffer first, not your checking account. From the buffer, you pay yourself a fixed monthly salary.
Fat month, excess stays in the buffer building reserves.
Lean month, you draw from the buffer. You always take home the same predictable amount regardless of what clients paid. How to set your buffer salary.
Add up your total income from the last 12 months. Divide by 12. Multiply by 75 to 80%. That's your monthly salary from the buffer. The 20 to 25% discount creates a cushion in the buffer for long dry spells.
Example, earned $90,000 last year.
Monthly average, $7,500.
Salary, $6,000 per month.
Consistent. Predictable.
Regardless of what clients pay.
Instead of saving a fixed dollar amount, save a fixed percentage of every payment that arrives. Client pays $5,500 goes to investments.
Client pays $12,000, $1,200 goes to investments. Client pays nothing, nothing goes to investments.
The percentage is constant. The dollar amounts vary.
The system scales with your actual income automatically.
On fat months you invest more.
On lean months the system doesn't break.
The system operates in 3 modes based on your monthly income.
Mode 1, lean month, income below your average.
Invest only 5%. Priority is protecting your buffer. Mode 2, normal month, income near your average. Standard split, 10% to protection, 20% to investments.
Optimal buffer, 3 to 6 months of your monthly salary. If you pay yourself $6,000 per month, your buffer target is $18,000 to $36,000. This lets you survive 2 to 4 months without a single client payment while maintaining your lifestyle without changes. Keep the buffer in a high-yield savings account earning 4 to 5%.
It serves double duty, income smoother and emergency fund in one account. Critical for freelancers, self-employment tax.
As a W-2 employee, your employer pays half your Social Security and Medicare, 15.3% split. As self-employed, you pay the full 15.3% yourself.
Plus income tax.
Total quarterly estimated taxes can easily reach 25 to 30% of gross income. Create a separate tax savings account. Every client payment, immediately move 25 to 30% to this account. Quarterly deadlines are April, June, September, January. The SEP-IRA Simplified Employee Pension is the most powerful retirement account for freelancers. You can contribute up to 25% of net self-employment income, maximum $69,000 in 2024. Contributions are tax deductible, they reduce your taxable income dollar for dollar. $100,000 in freelance income, $25,000 into SEP-IRA reduces your taxable income to $75,000. Tax savings of approximately $6,000 to $8,000.
The scenario every freelancer fears. 0 client payments in a month. With the buffer system, you pay yourself your normal salary from the buffer. No panic. No lifestyle disruption. No panic selling investments. Investment contributions for that month, 0. For freelancers, liquidity is more critical than maximum return.
Priority 1, money market fund or high yield savings, 4 to 5%, same day access.
This is your extended buffer if needed. Priority 2, Roth IRA, invest in a total market index fund, FSKX or VTI. Up to $7,000 per year. Tax-free growth. Can withdraw contributions without penalty. Priority 3, taxable brokerage after maxing Roth IRA. Dividend stocks and index funds. Priority 3, only when buffer is fully funded. Concrete example.
January 20,000, invested 2,000.
February 8,000, invested 800. March 14,000, invested 1,400. April 0, invested nothing. May 18,000, invested 1,800. June 6,000, invested 600. 6-month total invested, $6,600 from completely unpredictable income. The percentage method transforms chaos into consistent wealth building. No buffer yet. Here's the sequence.
Months 1 through 4, direct all savings toward building the buffer to 3 months of your intended salary. Invest only 5% during this phase, barely enough to build the habit.
Once buffer reaches 3 months, switch to the full percentage system. The buffer building phase feels slow. It isn't. You're building the foundation that makes everything else work.
Skip this and your system collapses at the first lean month. The fat month is psychologically the most dangerous.
20,000 arrives. It feels like wealth.
The temptation to upgrade your lifestyle, take an expensive vacation, or buy equipment is overwhelming. The system protects you, money flows to buffer and investments automatically before you consciously decide to spend.
Invest before you spend. What you automatically move away from your checking account doesn't tempt you.
Miss quarterly estimated tax payments and you owe penalties plus a surprise tax bill in April.
Simple system, separate savings account labeled taxes. Every payment you receive, immediately transfer 25% to this account.
Pay estimated taxes 4 times per year using IRS direct paid deadlines are April 15th, June 17th, September 16th, January 15th.
Never a surprise. Never a penalty. Tax money is already set aside. The biggest financial blind spot for freelancers, health insurance.
Without an employer plan, you pay full premiums.
Options.
Healthcare.gov marketplace plans subsidized if your income qualifies.
Health sharing ministries, lower cost alternative. If your spouse has employer coverage, join that plan.
Deduct health insurance premiums as a self-employed person reduces your taxable income. Budget $400 to $800 monthly and build it into your buffer salary calculation.
The complete retirement system for freelancers.
Layer 1, Roth IRA, $7,000 per year, tax-free growth, most flexible. Layer 2, SEP-IRA, up to $69,000 per year, tax deductible, gross tax deferred.
Layer 3, solo 401k, if you have employees or want even higher contribution limits.
Freelancers can legally shelter far more income from taxes than W-2 employees.
Use these accounts aggressively.
Every dollar in an IRA is a dollar not taxed this year. The solo 401k is available if you're self-employed with no full-time employees other than a spouse. Contribution limit 2024, $69,000 or 100% of net self-employment income, whichever is less.
Combine employee contributions up to $23,000 plus employer contributions up to 25% of net income. Can have both Roth and traditional components. More flexible than SEP-IRA in some scenarios. Late estimated tax payments cost you a penalty, approximately 8% annually on what you owe. Simple system. IRS Direct Pay at irs.gov, free. For due dates, April 15th, June 17th, September 16th, January 15th. Use prior year safe harbor, pay at least 100% of last year's total tax bill spread evenly across 4 quarters. No calculation required. No underpayment penalty guaranteed. For options for self-employed health insurance. 1. Spouse's employer plan, cheapest if available. 2. ACA Marketplace at healthcare.gov, subsidized based on income. 3. Professional Association health plans. 4. Health sharing ministries. All health insurance premiums as a self-employed person are 100% tax deductible as an adjustment to income before itemizing.
This discounts your premium by your marginal tax rate effectively. Use a portion of your home exclusively and regularly for business? Deduct that percentage of home expenses, rent or mortgage interest, utilities, internet.
Simple method: measure your home office square footage divided by total home square footage.
That percentage of eligible home expenses is deductible. On a $1,000 monthly rent with a 10% office space, $100 per month in tax deductions. Contributing to a SEP-IRA or solo 401k reduces your net self-employment income, which reduces the base on which your 15.3% self-employment tax is calculated.
Earn $100,000. Contribute $25,000 to a SEP-IRA.
A tax on $75,000 instead of $100,000. You save approximately $3,825 in SA tax alone from that contribution.
6 months without meaningful income.
With a funded buffer, months 1 through 3, normal salary, minimal stress. Month 4, buffer at 50%, reduce discretionary spending.
Month 5, take any reasonable work. Month 6, buffer at 25%, activate full network. The buffer didn't solve the business problem,
but it bought 6 months to solve it without financial panic making business decisions worse. The percentage method works better with multiple income sources. Consulting contract, online course sales, affiliate income, digital product sales, each stream gets the same percentage split immediately on arrival. Multiple streams reduce the income variance that makes single-client freelance businesses nerve-wracking. 3 streams each averaging $4,000 monthly is more stable than 1 stream averaging $12,000.
Cash flow is the real constraint, not income. Invoice clients on net 15 terms, not net 30. Follow up on day 16 for any unpaid invoice immediately and professionally. Offer 2% discount for payment within 5 days. Use Stripe, Wave, or PayPal Business for immediate payment options.
Every day an invoice sits unpaid is a day your buffer is not funded and your investments are not growing. A Roth IRA feature especially valuable for freelancers: you can withdraw your contributions, not earnings, just contributions, at any time without taxes or penalties. This makes it function partly as a backup emergency fund in extreme situations.
You would prefer not to withdraw, losing future tax-free growth.
But knowing the option exists provides psychological safety during difficult business periods.
Michael, freelance web developer. Income ranges $4,000 to $18,000 monthly. Average $12,000, $144,000 annually. Buffer salary, $8,000 monthly. Invests 15% of every payment immediately, average $1,800 monthly. 5 years, buffer $30,000. Roth IRA maxed every year, $47,000.
Taxable brokerage, $60,000.
Total, $137,000.
Once per year, not monthly, not quarterly, do a full freelance financial review.
Did income grow? Should I update my buffer salary? Did I max my retirement accounts? Do I have adequate health insurance? Should I incorporate for tax advantages? This annual hour prevents years of financial drift.
Schedule it like a client meeting, fixed date, no rescheduling, non-negotiable. Contributing to a SEP-IRA or solo 401k reduces your net self-employment income, which reduces the base on which your 15.3% self-employment tax is calculated.
Earn $100,000. Contribute $25,000 to a SEP-IRA.
SA tax calculated on $75,000 instead of $100,000. You save approximately $3,825 in SA tax from that one contribution alone. The percentage method works even better with multiple income streams.
Consulting contract, online course sales, affiliate income, digital products, each stream gets the same percentage treatment immediately on arrival. Multiple streams reduce the variance that makes single-client freelancing nerve-wracking. 3 streams averaging $4,000 each is more stable than 1 stream averaging $12,000. Cash flow is the real constraint, not income. Invoice clients on net 15 terms, not net 30. Follow up on day 16 for any unpaid invoice immediately and professionally. Offer 2% discount for payment within 5 days. Use Stripe or PayPal Business for immediate payment options.
Every day an invoice sits unpaid is a day your buffer is unfunded and investments are not growing.
Michael, freelance web developer. Income ranges $4,000 to $18,000 monthly. Average $12,000, $144,000 annually. Buffer salary, $8,000 monthly. Invests 15% of every payment immediately, average $1,800 monthly. 5-year result, buffer $30,000. Roth IRA maxed every year, $47,000. Taxable brokerage $60,000. Total, $137,000. Ordinary freelancer. Extraordinary result.
Once per year, 1 focused hour.
Did income grow? Update buffer salary? Did I max retirement accounts? Adequate health insurance? Should I incorporate?
Schedule it like a client meeting, fixed date, no rescheduling, no exceptions.
This annual hour prevents years of financial drift. The freelancers who fail financially aren't unlucky, they're unreviewed.
A Roth IRA feature especially valuable for freelancers: you can withdraw contributions, not earnings, just contributions, at any time without taxes or penalties. If you contributed $30,000 over the years, you can access that $30,000 if truly necessary. You would prefer not to, losing future tax-free growth. But the option exists. This psychological safety is real and valuable during difficult business stretches. Health-sharing ministries are not insurance but serve a similar function.
Members share each other's medical costs.
Monthly cost, typically $200 to $400 for an individual, significantly less than ACA plans for many self-employed people.
Limitations: pre-existing conditions may not be covered initially, mental health coverage varies, not regulated as insurance.
Used by thousands of freelancers as a cost reduction strategy when full insurance is too expensive.
Income below expectations this month. 3 immediate actions. 1. Review the buffer level, how many months of salary remain. 2. Reduce any discretionary spending in the life account. 3. Outreach to 3 existing clients about potential work.
The buffer gives you the time and clarity to take these steps without making desperate decisions. Financial stability creates better business decisions which create more income. If you have retainer clients, fixed monthly payments, the system becomes simpler. Treat retainers as predictable income, project-based work as variable income.
Retainer income, apply the full percentage split automatically on receipt. Project income, apply the same percentage immediately when paid. The predictable portion funds your baseline buffer salary.
The variable portion creates the fat month investment opportunities. After 6 months of freelancing, you know which clients pay on time and which pay late. Use this data. Clients who consistently pay late factor their payment timeline into your buffer projections. Clients who pay early bonus buffer fill.
Request faster payment terms from slow payers or charge a late fee. Your buffer exists partly to absorb payment timing variance. Understanding your client payment patterns makes the buffer sizing more accurate. 3 signals that incorporating as an LLC or S-Corp makes financial sense.
1. Net self-employment income consistently above $50,000 annually.
2. You have significant business expenses you want to separate from personal.
3. You're ready to pay yourself a reasonable salary and take remaining profit as distributions, avoiding C-tax on distributions in an S-Corp. Consult a CPA specializing in small business before incorporating.
The tax savings can be substantial. You need to celebrate fat months, or the system feels punitive and you'll abandon it. Build a celebration rule into the system.
Fat month: after the automatic percentage investment, take 5% of anything above your average monthly income and spend it on something enjoyable.
This guilt-free celebration budget makes the system sustainable. You worked hard for that fat month. Enjoy a fraction of it.
The system still captures 95% of the upside.
Here's what the system looks like when fully operational. Income arrives irregularly.
Immediately, taxes to tax account, percentage to investments, remainder to buffer. Monthly, fixed salary from buffer to checking. Annually, max SEP-IRA or Roth IRA, file quarterly taxes without stress, review buffer salary, review insurance. The fully operational system removes financial anxiety from freelance life entirely. You can focus on creative work and client relationships, not financial survival. You are not alone. Over 16 million Americans are self-employed. Communities /freelance /self-employed, local SCORE chapters, free mentoring for small business owners, industry-specific associations, Freelancers Union. Connect with others running similar financial systems. Learning from people ahead of you on the same path saves years of trial and error. Freelance financial literacy is a community sport. Financial freedom for a freelancer is not retirement at 35. It's optionality. It's having a buffer so well funded that you can turn down bad clients without fear. It's having an investment portfolio generating enough passive income to survive a 6-month project drought without lifestyle impact. It's having the financial stability to take creative risks on interesting work that might pay less. Freedom is choosing your work, not being chosen by necessity. One action before you close this video. Open the Notes app on your phone. Write 3 numbers, your average monthly income, 80% of that, your buffer salary, and 10%, your first investment percentage. These 3 numbers are the foundation of your system. Commit them to paper. The first step is clarity on the numbers. Everything else follows from these 3. Drop a comment. Do you already have a buffer account set up, or is this the first time you've heard of it? Either answer is useful. If this gave you a system you can actually use, hit like. Subscribe and ring the bell for more breakdowns built for people with non-traditional income. See you next time.